Welcome back. One of the benefits of having access to such a vast array of data is we're able to take a look at the economy from many different points of view. Today, we're going to take a look at business applications. These are applications to form a new business. Uh, Essentially, when a new business is formed, it has to request an EIN, employee identification number, essentially a U.S. Tax ID number. And this is compiled by the Census Bureau. And it is categorized into many different sectors. So, for example, we see here, and this is on a month over month basis, this is a change that occurred. We can see utilities and is up 34% month over month, mining up 42%, healthcare's up 2%, and we see construction, other categories, transportation, accommodation, retail trade are basically flat. But taking a bigger picture look at this, the black line is the S&P 500. It goes back to the beginning of 2021. So we're looking at about 2.5 years of data, and the blue histogram bars show us this is the number of EINs requested specifically to form retail trade businesses. We could think of these businesses as, shopping malls, also online business, for example, but on the retail level. We did hit historic highs going back to 2021. That was around 92,000. We did see a pretty big dip to the downside. Coincidentally, or maybe not so coincidentally, we saw these very big lows that were achieved around June, July of last year, 2022, coinciding with the inversion of the bond market. And we've talked about that a lot and how that occurrence where the 1 year traveled above the 10-year yield coincided with a real shift in a lot of economic data. But now we've seen a pretty big recovery. Notice a pretty strong correlation with the stock market as well. As the S&P 500, the black line goes down, so do these histogram bars. And when one market moves up, the economic indicator also moves up in kind. Registering a higher high this month is encouraging. It does show that maybe the S&P 500 has more legs to it. It essentially just shows that a greater amount of applications have been filed to open new retail trade business. Now, S&P 500, now comparing this to the accommodation and food services, also a pretty strong correlation, not as clean as what we saw with the retail trade, but we do see historic levels that were hit on the downside early 22, and now both lines have moved to the upside, the S&P 500 and again accommodation, food services, which by the way is pretty encouraging because if you recall during the pandemic, the hospitality sector in particular was hurt very hard, as well as restaurants. So the fact that we see a greater, over the long term, a greater number of applications for new businesses being requested, that certainly is an encouraging sign. Now, on the other side of the coin, we see transportation and warehousing. That is basically at or very close to the lows we've seen for quite a while. It really has moved away. And I think that this coincides with a lot of really weak data that we're seeing in terms of auto sales. Auto sales, transportation, warehousing, I think, kind of goes hand in hand. It is quite interest rate sensitive. High interest rates have not hurt the housing market like many have thought, maybe due to the lock-in effect where, sellers just don't want to sell their house and roll themselves into another high interest mortgage. But that's not really the case in terms of the automaker industry. Usually, because cars are not as expensive as homes, they're more liquid in terms of, somebody to buy and sell. So it really is being hurt. We can see the applications for new businesses in this area is not doing well. Construction on the other side is very strong, hitting historic highs that we have not seen in quite a long time. This month's report is a little bit lower than the prior one, but still, taking a look at the bigger picture, construction is very high. And again, what's happening is that there's a very limited amount of inventory out there in the real estate industry because any potential seller doesn't want to sell and then have, the situation where they're rolling themselves into a higher interest rate mortgage. The higher interest rates are basically, dissuading potential sellers from actually pulling the trigger. Utilities, it's in the center of the range. There's not a very clear correlation here, to be sure. This is actually quite disconnected from the S&P 500. Mining, it has been stronger. It's probably closer to the weaker side. I know this month's report looks positive, but the prior several months' reports did not look good. Gold and other metals, they've been treading water. They really haven't been able to break out in any direction. Here's healthcare, one of the stronger sectors out there. We're going to take a look at, the next couple days, some alternative data as it pertains to, the jobs market. And in particular, the healthcare sector is actually one of the strongest sectors out there. And we can see the past 7 months or so, we've seen historic highs. I don't even know necessarily if this is related to, the pandemic and what had happened, because that was as of a couple of years ago. The healthcare sector is quite strong, stronger than probably any of the other sectors, at least from this point of view. Now we take a look at on a year-over-year basis, comparing this month's August report to the August of the last year. Healthcare up 13% year over year. That's the raw number of the amount of applications for an EIN, employee identification number, compared to last year this time. Construction also up 13%. Accommodation in travel, hospitality up 13%, retail trade up 18%. Those are the strong parts of the economy, at least from this point of view. If we want to use this as a leading indicator, say, okay, what do we think is going to work well into the future? Retail trade, accommodation, construction certainly looks strong. I think that's probably a little reactive. And healthcare. On the weaker side, transportation, utilities, and mining. Uh, I know transportation is only down 9%, but certainly, uh, given very high interest rates, it's difficult to see a way that the transportation sectors are going to recover anytime soon with these higher interest rates. Credit card and auto loans are already at historic highs. So it's something to be said. It's just another way to look at the economy from a little bit of an independent, alternative point of view. Hopefully, this brings a little bit of extra light to a very complex situation. With that said, we have a Federal Reserve meeting coming up and, a lot of other events on the economic calendar in the very near future. And we'll be sure to update you along the way with any developments. We hope this has been helpful. We look forward to seeing you back soon.